Welcome to the program. I'm Mark Imperial. This segment's being brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their businesses, and to leave a legacy. I'm doing a series of spotlights on remarkable business intermediaries and exit planning advisors from across the country. And joining me on this segment is Lou Baker. He's the founder of Rock Creek Wealth Planners and Advisors, and he's also the co-founder of Transworld DC Metro. Lou, welcome to the program.
Thanks for having me, Mark. Appreciate it.
Lou, tell us a little bit about your work, and specifically, who are the types of clients that you specialize in working with?
Certainly. So, man, I've been doing this for so long, Mark. So I'm a 27-year securities industry financial planning veteran here. I got my start back in, I guess, 94 or so with Merrill Lynch, and was a vice president at Morgan Stanley, but I've been an independent investment advisor for the last 17 years or so. And so what we've been able to accomplish with Rock Creek is not only do we have an SEC registered RIA firm, we do give investment advice, but we have a financial planning based approach to what we do. So back in 2011, I got my CFP designation and have been working really with individuals, business owners for that period of time, really helping them from a stocks and bonds kind of financial planning perspective. But more recently, back in 2017, my wife and I actually looking for something to get her out of corporate America, looking for her to make a small exit out of corporate America, actually purchased a business brokerage franchise with a franchise called Transworld Business Advisors. It's headquartered in Florida, but there are probably over 140 different Transworld offices with over 400 really business brokers, agents across the country as well as internationally. So we own DC, the DC territory. And what we were thinking when we started this thing was, hey, if I'm helping business owners with their financial planning, it's only natural for us to have a hand in them getting them to the transactional phase of the business. So two certainly different skill sets, financial planning and actually making the transaction of a business buy and sell. But we thought they would work very well together hand in hand.
So you were doing the Great Resignation before the Great Resignation was cool. That's
Yeah,
what it sounds.
she
So
was
Lou,
doing the Great Resignation. She was doing it. I wasn't, but she was definitely looking for something a little bit different.
absolutely, Lou, working with business owners. Tell us about this exit planning side of it. Why is it so important, and what don't these business owners know that they really should know before they look at exiting and selling their business?
Well, I'll tell you, as a certified financial planner coming out of the brokerage world of the Merrill Lynch's and Morgan Stanley's of the world, I was really short-sighted in what I was actually providing for business owners. I used to say that I worked with business owners because I did, helping them with 401k plans and benefits, things like that. But I really wasn't working with them as a trusted partner in their business. I mean, I think the most important thing that we can do, and again, I have my own business, is to start with the end in mind, right? How are you going to transition? What's it going to look like when it's time for you to leave this business? It's perfectly okay for you to want to close your doors and walk away. But if you are going to take that approach, you better have maximized those benefits. You better have maximized those tax deferred vehicles, those 401k savings, all those things. But the problem is with many business owners, they're taking a lot of write-offs as it is, and no one's coming along matching them. So they don't have the same incentive to get into their 401k expecting for somebody to come along and match them with 4 or 5% of their contributions because they're their own match, right? So what ends up happening is you have these business owners who have basically built great businesses, but they've kind of painted themselves into a corner in that they are the business. And then when it comes down to time for them to exit, when they exit, so goes the business. And so no one's going to come along and buy a business where the person who's trying to leave the business is going to take 90% of the intellectual property, the revenue generation, the business development, trade secrets with them out the door. So if they haven't done the things that most employees do in building up that big 401k balance, and they haven't figured a way to exit their business to give someone else some value that they'd be willing to pay for, they're kind of stuck. So again, the first thing that they need to do is start with the end in mind. And good business owners are working towards systems and efficiencies that help them become somewhat dispensable in their own business.
It's incredible how closely related that selling the business and planning your exit to the business are so closely related. The conversations are kind of overlap a little bit, but it's important. Give us a little insight. Take us back to like the business owner. They don't know what they don't know. So what's on their mind? Like, do they think it's as selling their business is as simple as like selling their house? What do they first, think when they reach out to you?
There are a lot of similarities, but one thing is for sure, the business owner knows their business, right? The problem is he doesn't know past his business and how they're going to get out of the business. So most of them have never really had an exit before, right? Maybe there may be some of them who actually went through a transaction because they bought their business, right? But for the most part, people have honed in their own skill set, created something of value, and taken that value to market in the form of starting their own business, right? And they're so focused on the business that the processes and the hiring a talent, a mini me, to actually leave behind so someone else can get value from what they've built is very important, but often overlooked. But business owners know their business. I mean, they can tell you everything about how to generate revenue in their business, but it's really that planning for the exit that is very important, that they should be looking at many years in advance. They've got to determine whether they're going to have a lifestyle business or whether they're going to have a venture business. So it's really going to depend. But the planning on the upfront end really is going to be what differentiates someone from having a successful exit. The longer amount of time, the more time we have to plan for that exit, the better we can put systems in place to create value.
Speaking of that, how far in advance should they start planning this? I mean, kind of give us an insight about, how far in advance they should start planning, and what are the big kind of things that they need to get in order to make their business sellable?
Mark, the cliche is always going to be that it's never too early. But I would certainly say that you should at least have a 3 to 5 year window of preparation before you are looking to exit your business. And the reason I say that 3 to 5 years is because you're really going to have to delve into some processes. And if you want the highest multiple, so businesses trade on a multiple of small businesses anyway, on a multiple of SDE, or seller's discretionary earnings. And so if I give you a range of a certain business trades at 2 to 4 times SDE, that means if your business generated $100,000 in earnings and it's trading at 200 and it's trading at 2 times earnings, you're going to get 200,000 for the sale of your business. If it's trading at 4 times earnings, you're going to get $400,000 for your business. But how you get the market's going to determine for this type of business in this industry, it's willing to pay 2 to 4 times. But how do you make sure that your business is going to be on the 4 times end as opposed to the 2 times end? You're going to have to make investments to systematize your business to get you to that 4 times earnings, as opposed to getting you stuck on the 2 times earnings. And again, a lot of those systems, it might make you uncomfortable. It's making you indispensable. That's important. But again, you're going to have to invest some capital, and you want to have some runway to see the results. No one wants to see that you invested, but you didn't get to see whether those investments actually panned out. So you want to be able to tell a good story that, hey, my business was here at one point in time, like any other XYZ business. But then 4 years ago, we took the step and we made this investment and we did this and we did this step and we did this step. And that way you build the story to move your business up the scale of the multiple that you can expect. So it's never too early, but again, you got to give yourself that 3 to 5 year exit planning approach.
Fantastic insight. And unlike real estate where the comps are public and you could easily find them, finding that multiple or the valuation or comps or comparables that have just been sold, that's not as easy to find, I'd imagine. Lou, tell me, like, what inspired you to get into this field and get into business brokerage and into exit planning? How did you get started?
As I said, as a typical CFP that came from the brokerage industry that claimed that I worked with business owners, when we bought the business brokerage franchise looking for something for my wife, we actually got out of we were looking for different opportunities. And my wife Melissa has that MBA finance background. And so we had such a bad experience in dealing with some of these business brokers out there. We just knew that we had the value add and the standards that could make a difference and could make an impact in the industry. But when I started getting involved with really how businesses are bought and sold and what it means to the business owner to actually do true business planning, not just, hey, do you have enough money to retire, but really looking at the value adds that someone could put into their business. It was just such an eye-opening experience for me that I took it upon myself to get that certified exit planning advisor designation. So it was really just having my eyes opened up to what business owners were going through and how short-sighted I was in looking at, okay, do you have a 401k plan? Do you have a life insurance plan? So that was really, the game changer for me, getting into the business brokerage business with my wife.
That's terrific and that's powerful. Lou, for folks listening, business owners listening who would love to speak with you, that know that they need your help, how can they find you, connect with you, and learn more?
Well, of course, you can reach us at the office at 202-899-1400. Again, that's 899-1400. My website is rockcreekwealth.com. Again, it's rockcreekwealth.com. And my email address, you can email me directly at lbaker@rockcreekwealth.com.
Lou, this has been terrific. I really appreciate you taking the time to share with my audience today, and I wish you continued success for you and for all of your clients.
My pleasure, Mark.
That was Lou Baker, the founder of Rock Creek Wealth Planners and Advisors and the co-founder of Transworld DC Metro. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their businesses, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.